It has been a volatile trading week here on the floor of the New York Stock Exchange, and today has been no different. As always, standing next to me right now to talk about the trading session and the week as well is Peter Cardillo, Chief Market Economist of Rockwell Global Capital. Peter, thank you very much for your time, and how are you doing today?
Very well, thank you.
All right, before we talk about the week that just happened, let's talk more about today. The Dow Jones opened mixed. Right now, the Dow is down about 50 points, and this due mostly in part, well, partially in part, to St. Louis Fed President James Bullard coming out just 2 days after the September FOMC meeting, stating already that we could see tapering in October. Do you think that had any effect on the markets?
No, I don't really think so. I think what we're seeing here is the options expiration taking its toll on the market today. You know, it's quadruple witching day, and generally when you have that, you have some volatility. Now, we didn't have any macroeconomic news today, and of course, you know, Mr. Bullard saying that, you know, probably weighing a little bit on the metals, obviously, but in terms of the stock market, I think, you know, it's just options related.
Okay, you're talking about quadruple witching. I have to ask you about that. As is standard, whenever there's quadruple witching, there's always a ton of volatility. At the end of this week, leading into next week, do you think that volatility will shift the markets in a certain direction, or will it still stay the same?
Well, I think we're going to have volatility. There's no question about that. And I think we're probably looking at a little bit of a pullback next week, and simply because of the fact that the rhetoric over the debt ceiling is going to intensify. You know, we're going to be hearing a lot of talk about that. Mr. Obama continuing to threaten to veto, while Congress wanting to take even stronger measures to reduce the budget. And so, you know, the fear factor and the political rhetoric is going to continue and is going to weigh on the market. But I don't think we're headed for any major declines. You know, we do have a lot of economic numbers next week. We'll be looking at consumers' confidence, personal income, personal spending, housing data, durable goods. So there's a lot to really consider. And I think, you know, the Fed rhetoric is also going to be quite intensifying quite a bit, simply because of the fact that, you know, you said it before, 2 days after the Fed meeting, and here we have Mr. Bullard suggesting that maybe the Fed is going to taper in October, something I don't think is going to happen. I'm sticking to my predictions that it will happen this year, but it'll happen at the end of the year, sometime in December. And the reason being is I think that they're going to want to collect more data, especially on the labor front, on consumer spending, consumers' confidence. These are key economic indicators, and you know, if there's one thing the Fed does not want to do, that is to upset the apple cart. And they did that back in June when they began talking about tapering. And look what happened. We basically doubled in yields, in bond yields, and that sent a trauma in the bond market. And we also had a bit of a bumpy ride in the stock market. The one thing the Fed does not want to do, although they'll continue with this, with their rhetoric, and they'll dance around it, you know, we'll hear the dovish comments, and we'll hear the hawkish comments, but at the very end, you know, I think investors realize that while there's transparency at the central bank, nothing really changes. They continue to confuse the market. That's what they want to do. But at the very end, it's the basics that count, and I think, you know, we'll see volatility, but I think we'll close September with gains.
Okay, last question. We have to press the rewind button because the last time I spoke to you was on Tuesday, and you said don't be surprised if there is a surprise. You were one of the few to call that there will likely be no Fed tapering. Two questions. One, how does it feel to be one of the minority correct in that presumption? At the same time, I also want to know what you think, what effect the lack of Fed activity will have on the markets as we continue to move on for the rest of the month.
Well, I just think, you know, if anyone really looked at all the facts and realized what the Fed was saying all along, that that a surprise shouldn't have been a surprise. And so, you know, I guess I was in the minority camp, and it feels good that I made a good call, but what does it mean? I don't know. In any event, as far as the Fed's, you know, going forward. As I said before, I think it's going to happen this year because the economy, there are signs that the economy is doing well. But there are cross currents, and the cross currents are the labor market and, of course, spending. And the biggest problem that we have is Washington. So as long as that, once the debt ceiling gets resolved, and I think it will, America will pay its bills, even if they shut down for a day or two. I think the market is not going to really be all that concerned about that. It's not the first time, we've experienced that before. The bottom line is America is not going to default. And so I think by that time, the Feds will have collected enough of employment data, consumer spending data, and consumers' confidence data to begin trimming. And that trimming is going to happen this year. At least I think it's going to happen this year. And I think it'll happen in December.
Mr. Cardillo, as always, thank you very much for your time and insight.
My pleasure.